Okay, welcome to day 3 of the One Contract Challenge. I'm going to just run over the trades that I took today and my wins and losses. So, normally I don't normally trade market open in the middle of the night. However, on a Sunday I like to because there is normally good movement on a Sunday because the traders haven't traded all weekend and they like to end up taking some trades at night. So, what we had at first was we had our zone. So this is off a 1 hour chart. We can see we've got liquidity here. There could be a zone here. Didn't think the market was going to get up there today, so I didn't draw it. Got this liquidity here. We've got this liquidity here. And we've got this liquidity as well down here that I've drawn as a line, but we can draw that as a zone too. Okay, and get rid of that line. If it's going to let me, there you go. Okay, so now on Sunday night, some of the traders wanted to trade, so we had a look at the market. Now, when the market opened, notice that we had gapped up. So we had gapped up to here, and we ended up having this big fair value gap in the middle. So what I did was, when this started to push, I assumed that this was going to come and close the gap. It does 80% of the time. However, I also saw this fair value gap and I took a trade off this fair value gap, came down here and ended up hitting my stop loss. My second trade, then I was just observing. At the time I was making some content for YouTube, so I just spotted this fair value gap appear, quite a decent size. And the market at the top of this candle that followed had no top wick, which means there is strong selling immediately. I took this position. Then the market opened. Now we had this line drawn as this was a low that was causing in the night session. So the market opened at around here. Okay, market opened around here. Now we can, before the market opened, I've taken these lines out because once they become invalid, I don't really like to use them. So we could have that low drawn there. We've got a low here. And possibly, yeah, we'll draw that low there. So market opened right here, right around here. And you can see that previously to market open, we've rejected this liquidity zone. You can see it right here in pre-market, we've rejected the liquidity zone and we have started to push down. We came back up, we didn't quite get there and continued to push down. Now I didn't catch this move because I was busy with some back-end stuff on the website, but the market tapped that area, as you can see, and pushed down, came back up, couldn't even get close to tapping it. But what can happen now is this zone can get adjusted. We can adjust this zone down to here. All right. So this zone now gets adjusted. We also have a order block that got formed pre-market. So here's the order block right here. See that green candle? That has formed an order block. So that's going to be a bearish order block with color in red. So when the market comes back up here at market open, it starts to reject the order block. Now, order block becomes invalid when you get a close above 50%. And as you can see here, we're bouncing off the 50% line. Market comes down, tries to test it again, bounces off the 50%, and you get a move down. Now, this low that we had overnight, there was a lot of orders that were placed here, which is why the market came down here, stopped all these people out, all their stop losses got hit, and then you had this huge move up. Now, I didn't catch any of this, I didn't catch any of this. But in the afternoon, I took a trade at 5043 and I entered right here. So this, if I'd entered at the bottom here, this area here could have been my target, and this area here would have been my target. So once we got above that, because as you can see, this is a liquidity zone, and just to make it more clearer, I'll draw it for you guys. So let's just take this and copy and paste that over here. It's the beginning of the liquidity zone right there. So once we got above it, and then we bounced, I entered a position here, and then I held the position all the way into this big 1 hour fair value gap. Okay, now if I show you something on the 1 hour chart, oops, the 1 hour chart right here. Okay, this is the 1 hour chart. I'm going to get my ruler and show you. Now that's the bar here. We've rejected at the 50% line of that fair value gap. That's exactly where I closed my trade. And then we started to come down. Now, if this candle had have closed above the 50%, I probably would have held my trade. But it started to reject and I ended up closing here. Now, what that shows me is that there is sellers in this zone here and it is active. So therefore, huge sell orders came in. And as soon as this fair value gap opened here, I entered a position down and I entered at 5068. So I entered off this fair value gap all the way down and I closed the trade just below the 5-day moving average. Okay, so those were my trades today, and I want you to pay attention to the hourly chart that I showed you. So this is the hourly chart. Okay, a lot of movement or manipulation in the market will happen at at the close of the 10 a.m. candle or the 2 p.m. This is the 10 a.m. candle here. As soon as this closes, we come down a little bit and the market starts to rally. Now this is a typical AMD setup. You can see here we're accumulating, this is manipulation, and this is distribution. So we accumulated, we manipulated, took out all the people's lows from the liquidity zone that was there, and then we distributed up. Same thing here. This is the 2 p.m. candle. Okay, so when the 3 p.m. candle opens, we start to sell off. And if you go back and look and back test that strategy, you will notice that manipulation and distribution either starts or closes or finishes at 10 a.m. and 2 p.m. Something to note. So we are now on day 3, and you can see on screen right now what we have made so far on just one MES contract. Now, the reason why people fail evaluations is because they try to rush it and they don't realize how quickly trading 2-3 accounts, you can end up blowing your evaluation, having to pay for a reset fee. In the beginning, just trade one contract. Okay, once you've built a buffer of around 1,000 or 1,500, go on to the two contracts, because by then you would have developed your system and your edge that's got you there. And even then, if you want to just trade one contract, if you aim to do $200 a day or $200 a day on 20 accounts is still £4,000. Okay, so only trade one contract in the beginning. Do not size up until you have confidence. And if you hit your target of £100 or £200 a day, and you want to still trade, just paper trade. Okay, you can still paper trade MES, but the key to this is do not rush the process. There is nothing more frustrating than getting your evaluation account to £1,500, £2,000 in profit. You pass the evaluation, you get your PA'd account, and then you blow it within the first few days. Just stick to one contract. It's easy to manage. Have a stop loss of about 20, and I'll see you tomorrow.